Hey guys, so today I've made around $92 in trading. And let's talk about it. So this is my first win in 2026. And yeah, it was pretty good. The trades pretty well. Did well. Uh yeah, it's good. So yeah, let's do the MATE strategy. MATE is an acronym. M is for market direction, A is for alignment, T is for timing, and E is for entry. So first, let's see what the market direction is. So let's go daily. Okay, in daily we see that it's uptrending. Obviously, it's uptrending. Higher high, higher low, higher high, higher low, and it went all the way up. Or you can see it's uptrending. Plus, there is like a reversal from the 4 hour time frame. If you can see right here, there's a demand zone from the 4 hour time frame. You can put 4 hour time frame. There you go. So there was like a rejection from the 4 hour time frame. If you can see right here, there's like some rejection from the 4 hour time frame. So there's like a double bottom. You can see a double bottom. So you could have taken the trade over here, but since I was late, I've waited for it to retest, then break another structure. So once it broke again, then that's where I took a buy. Okay, so let's delete this first. Hold on. Let's delete the drawing. Okay, so you can see here from the 1 hour time frame, it broke. And plus there's also another reversal pattern right over here. See? So that's a sign that the trend is uptrending. And plus it also touched the demand zone. So once it touched the demand zone, I knew it was gonna go up. Okay, let's delete this. Okay. So after it broke, I took a buy over here. Then yeah, it went up. So yeah, our alignment, again, I put already the demand zone right over here. So alignment, then yeah, there's also the break of structure. We put the resistance, liquidity sweep. You can see over here. Some people would like take a buy since you see like there's like a, let's say, a break of structure somewhere over here. Someone might take a buy over here because there's like a break of structure, like a scalper or anybody, a scalper or a day trader. They'll make their stop loss very tight. And look, they got stopped out. That's why I rather choose to be a swing trader because your stop loss can be a little bit big. It's bigger. And it has space for the candles to move. Because if you go like scalping or day trading, sometimes people make their stop losses too tight. So that's why I like swing trading more because your stop loss is huge. So yeah, our alignment, we already put our demand zone, our resistance, our liquidity sweep. Now our next step is timing. See, I already put the MATE strategy. So M for market direction, we're done with that. A for alignment, we're done with that, so we can check. Let's just check it right here. Check for market direction, check alignment, and now we're gonna go for time. Is it timing? Yeah, it's timing. So our timing is when it breaks this structure right here. So we saw a break of structure. So we see over here from the 1 hour time frame that there is a head and shoulders, reverse head and shoulders. Plus it broke the retest from the double bottom. See, double bottom, then went up, make a higher high, higher low. You see that, higher high, higher low, then went up. Break the structure from the 1 hour time frame. You can see here the resistance, it broke here and over here. Okay, so we took a buy over here, then yeah, it went up. So once it breaks structure and a big bullish candle, by the way, a very big bullish candle, we took a buy over here. and that's where I took a buy. Okay, so okay, the mate timing we're done. Then lastly is the exit. Oh, what the hell? Exit. Okay, the timing because we already timed it. Now is the exit. So instead of because usually I risk $50 per trade, but since I have a good strat, it's a very good strat. I was able to instead of risking $50, I'm able to risk $31, which is good, which is really good. Usually, I risk around like 100 pips. 100 pips for 100 pips like $50 for me. So 100 pips. But since this demand zone is here already, there's a demand zone. I could make it even smaller. I could make it a little bit tighter, but not too tight. It, I don't make my stop loss too tight. I let it have room to move. Because some people make their stop loss so tight that the candles don't have much room and they get liquidated, then it will start going up. So this is why I always give my stop loss room. So here you go. So I gave it room around like I think 61 pips, around like there, 61. So below this demand zone. So instead of risking 50, I risked 31, and it's good. Yeah, it was a good. I couldn't stop it. I couldn't like ignore it, so I took the trade. So yeah, I took the trade, by the way, last week Thursday till it stopped Tuesday. Okay, it's good. Yeah, so our exit is done. Okay, we'll check our exit. Then exit. So everything's perfect. Can delete this now. Our mate strategy is perfect. So that's why it worked. The mate strategy really works. You can see here. By the way, and also, there's once it went to like, so I'm risking 50. So if it goes, let's say $100, then I'll do what you call a trend line break. So once it went to like 200 pips, that's like equal to $100 for me. I put a trend line right over here. Then when it created like a higher low from here, like a higher high, higher low, then higher high, higher high, it kind of broke. Then I'm like, okay, I'm gonna put a trend line now. I'm gonna put a trend line. So once it broke this trend line right here, I took a I took profit. Yeah, that's pretty much it. Actually, I was willing to wait for it to break this trend line, but since it made a higher low over here, I put another trend line right here. So I can take my profit early. And if it keeps going up, it's okay because there will be another opportunity that it will go up, then go down, wait for a reversal, and yeah, I'll get the opportunity and I'll trade again. So yeah, that's pretty much it. That's how I made $92. Pretty simple. So yeah, guys, if you watched till the end, thank you and see you guys next time.